Opportunity cost is everywhere. It's absolutely everywhere. Everything from personal finances to business investments. People just need to stop, pause, and reflect. Is there a better place to put my money before I either lose the opportunity to earn interest, before I end up having interest that I'm paying out to someone else? Is there a way that you could possibly recapture that interest, put it back into your system, a system that, quite frankly, you control? Again, there's no one telling you no. We're here to talk about lending. We're here to talk about the efficiency of capital today. And people often limit their thinking about opportunity costs to just debt. But how is it that we can help them see the bigger picture?
Opportunity cost shows up everywhere. It's like choosing between a toll road and a freeway. Paying the toll road might seem like the easiest, quickest solution, but over time, those fees drain your resources. What if you could build that road or a road that pays you back every time you drive on it? Jeremy, can you share a personal example where you caught yourself paying the toll and how the infinite banking concept helped shift your perspective?
Well, I can definitely give you an example of pre-IBC, right? So when I graduated from the academy, they taught me how to become a leader of character, but they didn't really teach me much about finance. And I went out and I bought a car, went to the dealership, found one that was within my budget. And they said, hey, if you finance this through us, we'll take like an extra $1,000 or $2,000, whatever the sticker price was. And I was like, done, easy. And I was making payments for a couple months. And finally, like the girl that I was dating at the time, she asked to see my note. And it was a strange question when I told her, like, I'm financing it through the car dealership. She said, Jeremy, let me see that. I don't remember the interest rate, Jason, but I do remember that her jaw dropped. She couldn't believe the interest rate that I had on this vehicle. And lo and behold, I had been taken advantage of. Like I was paying their bank a very high interest rate for what I thought was an immediate gratification, the immediate of, let me circumnavigate this toll by getting a lower price. And so I paid that. I paid that for what I thought was going to be faster. But in the long run, I was going to pay so much more in interest. And, had I had IBC at the time, the opportunity cost of recapturing that and going through my own banking system, I could have had the car and I would have recaptured all the interest of those banks. Instead, I had to find another means of, paying for that vehicle. And here's another thing. We talked about it in another previous episode, but opportunity cost goes just beyond what we're talking about with that example. When I gave that interest to that car dealership, what else happened to me, Jason?
Well, immediately when you gave that up, were you earning more money on that money? Or was that
No.
leaving forever, right?
Right. Like I got the savings. I got the $2,000 back. That was great. But what do you think I did with that? Being a silly lieutenant at the time, I probably went out and I spent it on something that I didn't need to spend it on. Not only that, but the interest that I was paying to that dealership, I lost the opportunity to earn interest on my own money. So that was the opportunity cost that was associated with financing the vehicle through them.
I love that. It's multifaceted. So we really have to think, what is our money doing? I love that analogy. Let's get more practical. How does paying cash, people love paying cash, Jeremy. How does paying cash for big expenses hurt someone in the long run? I know for me, in my 20s, that's all I did. If I couldn't afford with cash, I would not buy it. But let's get practical. How does that hurt you in the long run?
Yeah. So again, you paid cash on something and you lost the opportunity to earn interest on your money. So you got to immediately start saving all over again. If I had cash and I took it to that dealership and I said, hey, appreciate it. I appreciate the financing option, but I'm going to pay all cash today. And they'd be like, okay, done. They'd let me, sign it. I'd walk out. And guess what I'd have to do 60 months, or typically what people do 60 months later, 5 years. I got to pay for another damn car, right? I got to keep up with the Joneses. So over that 60-month period, I've been saving all over again. I lost the opportunity to earn interest on my money. And at the same time, I gave up. I had to start saving all over. So even though I wasn't paying interest to them, but I also wasn't paying interest to myself.
When you talk about that, right, when you talk about not paying interest to yourself, you talk about, our money gets less valuable every day, right? So as you're saving your cash and you're not earning money on your cash and then you're taking it out and you're spending it, you're not efficiently, like you said, you're giving up the opportunity cost. So have you ever faced a situation when you're about to pay cash for something, but now because of what you know today, you've leveraged your policy instead. And like, what was the outcome?
Oh, so how about I give you an example of how my wife uses her policies, right? So we typically look at IBC and fixing or answering one of three pillars: paying off debt as an opportunity fund for investments and legacy planning. My wife started in pillar one, paying off debt. And she had the money to go out and, she's an attorney. She had the money to go out and pay off these credit cards. And I said, why would you do that? I was like, don't pay it in cash. Stand by. Let's funnel that money that you just had from this case through your IBC policy. We're going to lock it in. We're going to lock in that capital. That way it earns uninterrupted compounding in the future. And then we're going to take a policy loan. So your money's now in the policy, earning uninterrupted compound interest. And now we're going to take the policy loan to pay off the debt. What that did was, one, she was able to pay off the debt. She put herself on a repayment schedule. So she played honest banker, pay yourself back, pay yourself with interest. That interest that she paid herself went right back into her banking system, earning what? Interest. So she was able to, rather than just go pay off the debt entirely, she first paid herself first, right? And if you remember the book, if anyone here has read the book Richest Man in Babylon, what do they say? Pay yourself first, pay yourself with interest.
And so if you're listening, think about that. Pay yourself first. Richest Man in Babylon talks about paying yourself 10%. This is what all the books about wealth building talk about. Pay yourself at least 10%. You can pay yourself more, but then in your mind, I want you to think about how much you earn every year, every month, and are you paying yourself 10%?
How about you? Ever faced a situation where you had to pay all cash for something, but then instead you used your policy?
Yes. I mean, that's why I started our first policy. You talked about building your wealth through debts, right? And expenses. You talked about keeping your wealth or creating more wealth, but you got to start where you're at. And when I looked, like we were paying out about $2,200 a month on 9 different debts. And like your wife did, right? Like Liz did, I spent time saving, paying myself first, putting the money in a segregated account. I built my first policy. I took out a loan where I was able to pay off those 9 other families. That's how I like to think about it. When money's leaving you, it's going to other families that are making money on your money.
Now, how do I Wells Fargo family or the Chase family,
the Ford family, the Hyundai family, the water filtration family, the debt consolidation family, like all the other families that are earning money. That's how I like to think about it, because I'm like, how do I bring that back to the Sipples, to our family? And so when we used our first policy loan, we paid off those 9 debts. And the funny thing is that my credit actually went down, because all of a sudden now I didn't have as much debt on the profile. I guess I don't know why, but like my credit went down, but now we're recapturing $2,200 a month that used to leave our family. And that's principal and interest, but that interest payment, it was an average of 13.5%.
Wow.
And that a lot of that was amortized. So it was much higher than that, but the average of all those debts was 13.5%. So yes, we recaptured $26,400 with our first policy per year, and we're still paying ourselves that amount of money.
That's an incredible story. I think a lot of folks lose sight of the opportunity cost and how much it can grow either for you or against you. Having the opportunity to, recapture not just the principal, but the interest payments, put that back into your family banking system. And one of the most successful families that you see do this, I got a book over here written by Garrett Gunderson. What would the Rockefellers do? I mean, when you're able to take loans from your own family banking system, and you practice this for generations, you don't have to go to third-party debtors and creditors. You don't have to worry about the underwriting. You don't have to worry about someone telling you no. You just have to be able to have the opportunity to take advantage of other opportunities. You have to have the opportunity to pay yourself. And when people have capital, what happens? Opportunity finds them, do they not?
Yes, 100%. And like right now, this is the time to talk about this. I had Connor ask Patty the other night as he's getting ready for bed. He's like, hey, Mom, what does a recession mean? And that was the first question. Like he was really worried about it. And Patty explained what a recession is. And he said, do we have to worry about that? And Patty explained to him, like, look, well, maybe 4 or 5 years ago, we would have had to worry about it. But since we started, and he got really happy. He's like, we practice infinite banking, right? So we're good. I'm like, yes. I mean, it might still affect us, but now we have our money growing somewhere it's guaranteed, somewhere where it's protecting our family. And that is, like you said, it is an opportunity fund. where now the money's growing for us, it's protecting us. And if we need it during the recession, it's there. If there's an opportunity presented, it's there. And that's the point of paying yourself first. That's why the wealthiest families tell us you have to pay yourself at least 10%. Like you have to make money first, and then you have to make more than you spend. You overcome Parkinson's law. Then that money that you save is what needs to come into your system. And where do you want to store it? That's what we're talking about today. We're talking about the opportunity cost and where do we want to store it?
Yeah, whether or not people like it, we're all in the banking business, right? We're either going to be bankers for ourselves or we're going to be bankers for someone else. We're going to be, you want to be the owner. Where IBC kind of fits in, everyone's got to go out and create money. Once you've created money, what do? You want to figure out a way to keep it. And once you figured out a way to keep your money, what do you do then? You want to protect it. And if you think of it as that ecosystem of create, keep, protect, IBC fits so perfectly and naturally in step 2 and partially in step 3. IBC helps you keep that money that you're creating, recapturing that interest, those hidden fees, a lot of the taxes that are out there. But there's also a portion of it that's protection. We don't get a lot into it, but these IBC policies, they help. A lot of them in most states are protected from judgments, liens, bankruptcies. Like there's a lot of protective elements because it is, at the end of the day, life insurance. And life insurance isn't a quote unquote capital account like your checking account. It's not a 401k. It's not an IRA. It's not one of these accounts that typically creditors and debtors are going to go after. And it's one of the reasons I like taking it for my business, and I like funneling business profits through it. I like taking business and securing the capital that's inside of it, and it does a lot of different options for me, right? So as a business owner, you, Jason, you've dealt with a lot of business owners. Can you explain how some of them have perhaps used it?
Absolutely. I mean, I was going to ask you the same question, so I'm glad we got there, is talking about like how many people listening to us right now in your mind, like, are you a business owner or would you like to be? Because we're really talking about control and security. We're talking about taking back control of not only our finances, but our life. And so, yes, I work with business owners all the time. I just got off the phone with one right before, this session with you. And it's exactly what we're talking about. He's expanding. He's been saving. He has the discipline, right? He's not picking regret. He has a lot of money just sitting in multiple accounts. And like to the tune of $1 million. Now, we don't all have $1 million, but he's expanding his medical practice, buying new offices, buying new equipment. And we're starting with what we talked about is like, hey, let's build this first policy. So 1, it's protecting your family. 2, you have access to the capital for this piece of equipment that you're paying $2,500 a month on. It's a $100,000 piece of equipment. And it's at 4.4%. But for some reason, he's paying $2,500 a month, which is way more than you think would be 4%, right, Jeremy, on a $100,000 piece of equipment. And the reason I'm taking time to set up this story is because when people see this, a lot of people that I talk to, especially business owners, they want to all of a sudden finance everything. So when you understand what the banks, like, why do banks lend us money? They lend us money. Why they offer us so many ways to take personal lines of credit, to take credit cards, to take this, because they're making a killing on us, 400 to 1,300% annually on every dollar that we deposit in the bank. And now they're making a spread on all of the other offers, right? They're making money on our money. So with this doctor, with this business owner that's expanding his business, I wanted him to start with something that was small, that he was comfortable with, and that he could pay off immediately and start recapturing that $2,500 a month. And then his next question is like, once he saw all of the money would be better in a policy versus in a bank, I was like, well, let's build that over time. Now you can protect your wife. Now you can protect your kids. You can help start building them. And so it comes into long-term planning because that's the first concept. If we're talking about opportunity costs, if we're talking about business owners, you're not going to recapture everything immediately, but over time, you will have regained so much more of that opportunity, keeping it in your family.
Yeah. And to dispel a misnomer, when we say like immediately, we mean within the first 30 days. Like you can start practicing this within the first 30 days. You set up your banking system. you're able to start borrowing and becoming your own banker within the first 30 days of capitalizing your own system. This doesn't take years like a lot of folks will tell you that it takes. That's one of the greatest things that I liked about it when I first got into it. And just like him, I started out small. I wanted to see what the process was like. Within 6 months, boom, I started another one. Now, I wish that I had that 6 months to capitalize my system, to, recapture it. But in the long grand scheme of things, it's so much better to get started today than it is, 10 years from now, right?
Yeah, the Chinese proverb, right? The Chinese proverb. When's the best time to plant a tree? Well, it's 20 years ago. Well, when's the next best time? I mean, the most common thing, Jeremy, that we hear, and I know because we've talked about it, is Jason, man, I wish I learned about this before, 5 years ago, 10 years ago, 20 years ago. Could you imagine? And it bums people out. It bummed me out. But then the reality is we didn't know it then. You weren't asking better questions. Like I had that conversation earlier this week. It's like, I don't know why we're not taught this. I go, well, the truth's going to hurt you a little bit. You want to know what it is? And, you want to know what the truth is? And she's like, okay. I was like, you just weren't asking yourself better questions yet. So forgive yourself. Just say, hey, you weren't ready. You weren't ready yet. It's okay. But if you're asking the questions now, how do wealthy families stay wealthy? How are people keeping more of their money? What's the most optimal way to do it? Because that's all we care about. If it wasn't through infinite banking, you and I, Jeremy, for our journey, we would be talking about whatever the thing was that was better than this, right?
Yeah. I mean, I certainly searched through, and I'm still searching, right? I'm still a student of wealth. I'm still learning about money. And I think so long as you continuously learn about money, you expand that ecosystem. But in my search, I just couldn't find something that was better because it's not an investment. And that's another misnomer we have to dispel. This isn't an investment at all, but it does bridge the gap between saving and investing. And if you look at IBC as an opportunity fund, to a place to kind of warehouse your wealth, to secure that principal, to start recapturing interest, fees, to be able to do that. And then when opportunity finds you, you can capitalize on it. You can use it. You talked about this gentleman, and yeah, he wanted to move a large sum of money and into his banking system. But my sister, as an example, she was just looking at moving a couple $100. And that was just, she was looking to do it to start financing her family vacations. She wanted an opportunity. Instead of paying for family vacations out of savings, she started thinking creatively. Hey, I've got this system over here that while it may not be able to go out and buy a house or buy a car, it certainly can pay for a hotel. It can certainly pay for some plane tickets. And she started small. And I'll probably say this time and time again. IBC is kind of like a snowball, right? You can start it at whatever size that you want. But as it grows and it gets momentum and starts rolling, what can you end up with? An avalanche of wealth. The trick is just to get small, like start. The trick is to just start and push it. Just give it a little bit of momentum and see what happens.
I love that. And it's not just see what happens. It's when your thinking changes. You're shifting your paradigm. Like what your sister just said. She's like, well, I was paying for cash for it before, but then you taught me, Jeremy, the opportunity cost that I'm losing the opportunity to have my money grown forever in one hand, creating a guaranteed legacy in the other hand. And we're going to go on the vacation one way or the other as long as I'm saving. So why don't I put the money into the policy first? We're just changing that one thing. Where does your money go first? We're not making you work or asking you to work any harder, any longer, to change anything else. We're just saying, where can you store your money? Like you talked about the snowball at the top of the mountain. And you put it there and now you roll it down the mountain. It gets more and more and more efficient over time. It rolls faster and faster and gets bigger and bigger. We've seen the movies or the cartoons where the little kid rolls the snowball down the hill and all of a sudden, you get halfway down the hill and it's picking up other little kids and there's legs sticking out of the snowball and everybody's going fast. It's getting bigger and bigger and bigger and it wipes out of town. I mean, by the time you get to the end of a policy, your cash has grown so much because of the eighth wonder of the world, uninterrupted compound interest, that little thought that you had about changing the one thing when you're going to pay for a vacation, all of a sudden it can fund so many other opportunities as they come up. And I think it's really the time to talk about this as we head into what looks like it could be a pretty bad recession.
Yeah. And it's always important, keep this in mind, opportunity cost is everywhere. It's absolutely everywhere. Everything from personal finances to business investments, people just need to stop, pause, and reflect. There a better place to put my money before I either lose the opportunity to earn interest, before I end up having interest that I'm paying out to someone else? Is there a way that you could possibly recapture that interest, put it back into your system, a system that, quite frankly, you control? Again, there's no one telling you no. The hardest part about these is actually going through the underwriting process. But once the system's in place, it's yours. The only person that's going to tell you no is you. So maintain that control. Look for opportunity costs. Ask yourself on a daily basis, when you're going to pull out that credit card, or you're going to pull out, that dollar bill, what's the opportunity cost associated with that purchase? And as you start to reframe your mind and start thinking like a banker, you'll start seeing opportunity cost everywhere.
And the verb that you said thinking like a banker, which you made it a noun, but banking's a verb. So like when you're operating as the banker, what would the bank do in that situation? Are they going to use their cash? No, right? They're going to find some way to create leverage. And when you're creating the opportunity like you're talking about, just, I guess, make note, everyone listening, whether you're driving, if you have a notebook, write it down, because it's more likely to stick in your neural pathways. It's just proven scientifically. If you can write it down. Now, if you're driving, please don't write. We don't want you crashing. But if you're listening to this over and over and over again, we're saying opportunity costs. And so the invitation to make a note today for yourself is to look at how you're spending money now. Where are you paying cash? Where are you using cards that you're not paying off, so you're giving up interest? Where is money leaking out of your family? Like where do you have the leaky bucket that you could plug the hole and keep more money in your bucket?
Yeah, I couldn't have said it better myself.
So Jeremy, I know that you use this. You're a real estate investor, and you've used this personally for real estate. It's one of the reasons you got into it. Can you walk us through how you've turned your policies into your own opportunity fund?
Yeah. So I started using it as almost an emergency savings account. So let's start there. I wanted to have a source of income where if another COVID event happened and I had tenants who couldn't end up paying the rent, and we were going through who knows how many months of people just being out, where is it that I could dip into cash that I knew I had full control of? There's no run on the bank or issues that I was going to encounter. Where's a banking system that I can control that was going to give me the interest that I needed to perpetuate my banking system? Once that capital started flowing in, and again, starting small, going back with that snowball analogy, and I was able to build up, a couple months of mortgage payments that were safely in there, then we turned it into more of an opportunity fund. And I started identifying opportunities either within my current portfolio or opportunities around my local area. So since I've had IBC, I've had plenty of other investors come out, and people know that I lend money. I typically lend money through my self-directed accounts. The reason I do it is, one, I didn't know about IBC when I first started them. Okay. So they're locked in there, and I lend to other developers or flippers or through some sort of funds. And I lend out through there. And people come to me and say, hey, Jeremy, I've got this opportunity. I would like you to, look at it. And if there's something there, let's talk. Well, what happens when an opportunity arises? Like, I have capital, so opportunity is finding me. And so what are people doing? They're coming to me with opportunities. And because I have the money, I create the rules, the golden rule. He who has the money creates the rules. So I can start negotiating rate. I can start negotiating terms. I can start negotiating equity. By having the opportunity, the cash that's there, one, I secured it as an emergency savings account. This little snowball continued to grow. I continued to go down the wealth mountain and started capitalizing itself to be creating opportunities for me. And in my personal portfolio, I've been able to self-finance like major renovations. When I'm saying like major, where I live in historic Savannah, windows. I cannot go grab windows from Home Depot and put them on these buildings. No, unfortunately, they have to be handcrafted, single pane, not efficient, but very expensive to make. And so rather than just swiping a credit card and paying for it, I'm able to fund it through my personal banking system to go to myself. One, take the tenant money, put it into my banking system, take policy loan, pay contractor to develop windows. But I took that money, capitalized my system. My system is now earning interest. That interest is going to continue to now perpetually grow. And I can put myself back on a repayment schedule. And again, play honest banker, pay yourself back, pay yourself with interest. All the interest I pay back to myself, back to my banking system, immediately goes to the cash value that I can be used and leveraged again for other future opportunities. That interest is earning interest on itself. Those dollars, that $1 now has multiple jobs. So as I continue to grow that system, those little green men are going out there and creating what? More green men, little more dollars. So having the opportunities, just by having the capital there and available, is opened up my opportunity to build other wealth, to build and expand my family banking system. Does that answer your question?
No, it was perfect because you started, like you said, you had the wealth snowball, the wealth mountain where you start off small. Now you have opportunities, you're putting the money to work, and you're not doing the work anymore. Like you have your little green men, which is the goal of all of us. There's multiple freedoms. We want time freedom. We want money freedom. We want relationship freedom, right? We want purpose. So you really just given people a nice frame on the different ways that we finance things. And you're saying, hey, every time we finance something, there's an opportunity cost. What if we took that $1 that used to have one job and all of a sudden it has three jobs? It is guaranteed growing. It's out to work. So you're saving it where it's guaranteed growing forever. It's out to work for you building your custom windows for your fancy, home that you have now that we know that. And then on the other hand, it's also provided a guaranteed death benefit. That's a multiple of the first function. So now your $1 just, basically went through the duplicator and it's doing three different things. And that's the opportunity that's there for everybody because this has been around for hundreds of years. It's legal. And we can teach you how to do it and how to look at it over time. That's the big thing. You want to keep thinking long term, like Jeremy keeps saying. He or she who has the money makes the rules, the golden rule. It's not just treat other people the way you want to be treated. It's treat yourself how you'd want to be treated.
I want to point this out too. This is pretty neat. We talked earlier about go out and create money, right? Have a job, W-2, you're in sales, whatever you end up doing. I'm not going to tell you how to go out and create money. I'm just going to ask that you do it legally, right?
Yes. Please.
Then we talk about how IBC does what? It helps you keep that money. And then it also helps you protect that money. These policies, like my beneficiary, it's my trust. Who's a part of my trust? My wife. If something were unexpected to happen to me, at the end of the day, we are using specially designed whole life insurance. This isn't something that Jake from State Farm goes out and creates, right? These are properly engineered banking policies. And because the whole life insurance is the foundation of it, there's a death benefit. Like I'm protecting my wife. I'm protecting my legacy. I'm protecting my family. So it isn't just going out and like having an opportunity fund. On the back end of it, there's still a death benefit that, which by the way, pays out to my trust tax-free. There's no probate. I mean, a lot of folks don't realize this, Jason, but did you know like probate is a lengthy, expensive public process?
I did because I'm 50 and at some point you start thinking about these things for your family. But, in my 20s and 30s, 40s, I probably did not until I started changing the questions. But yes, it's almost a curse word, right? Because of the amount of pain that it causes families. Like it's not a fun subject. Like you don't want to leave a taxable legacy. You don't want to leave a legacy that's going to have to go through probate. You want it to be efficient. You want it to be guaranteed and you want it to be tax-free. And so that's what you're talking about. So I love the example. I love your fancy windows. And I think that with the amount of ways that we've explained opportunity costs, again, when you're listening to this, just make note, how are you financing things and where is there opportunity for you to really do that more optimally? We're not making it right or wrong. There's a million ways to do this. And like Jeremy said, please make your money legally and then have the discipline to save it. And then we can go out and figure out how you can use this couple 100-year-old strategy to create more opportunities in your life.
Yeah. It's nothing more than a safety net and a wealth building tool all in one, right? And one of the things that I really like about it, I know we're going to talk about it in future episodes, when we talk about protecting the wealth, protecting that family, and I know that you're really heavily involved with Founding Fathers, there's an education side behind it. You mentioned earlier about Connor learning about IBC. You're first generation. Connor's second generation. What about Connor's children? The education behind this, the education of teaching people. How about this? What's the opportunity cost of that education? The opportunity cost of teaching your family, your descendants about money, about how banking really works. So that's another reason I really like this journey that we're on together, and being able to share these experiences with other people. And that's a whole show in and of itself. The opportunity cost of passing down a legacy, not a financial legacy, but a legacy of independence, a legacy of knowledge and information. I really look forward to that episode that we have coming in the future too. But if there's anything you want to say on that, like, by all means.
No, I mean, to wrap this up, to bring it full circle, and thank you. I mean, yes, it is. It's super exciting. I hadn't thought about Connor being second generation until you said it. So that's really fun to think about. And when we look at this and the opportunity cost we talked about the leaky bucket, how we have to see where we have our finances leaking out of the bucket. Where are we giving money to the other families we talked about? And how can we redirect that back into our own family and keep it and pass it on and have the education piece? We talked about, are you going to take the tollway, or are you going to create tolls that are paying you forever? Like, those are the analogies we use today. So we give you a lot of frames, but just remember, opportunity cost is everywhere, from everyday purchases to business investments. And the key to overcoming this is building the system that's going to work for you continuously, tirelessly, forever, and guaranteed. And so that's what infinite banking does. It gives you that control, it reduces your financial leaks, and it creates lasting wealth. So awesome job, Jeremy. It's fun doing this with you, and I can't wait we'll see all of you in the next episode.